you were a Martian arriving on planet Earth, and you saw how the banks functioned, you would probably conclude that there's a sort of fraud taking place here. I will need all these people to build the next phase of the Islamic finance revolution.
What other alternatives do we have as Muslims to normal banking options?
There is an ideal Islamic economic model. It's not sinful to be rich. It's not sinful to generate profit. I also often get asked by young people, should I work in financial services? The Islamic economy is one that is focused on tangibility. Every civilization that's had a gold standard has experienced these moments of great scientific and cultural advancement. It's a powerful drug for governments to keep financing a perpetual state of infinite war and environmental pollution by simply printing more money. We've become economic slaves. That's why I think we need to act as a bloc economically.
For conscientious Muslims, managing one's money in the West can be a very difficult prospect. Islam has a series of rules to do with money. The prohibition of riba, of interest, is one key principle. But also there are rules on trade that often place it at odds with a more laissez-faire neoliberal model. Muslims feel a sense of unease when we place our money in banks or engage in investment opportunities that may contravene these Islamic precepts. Now, as our community expands and as our financial resources increase, we need greater guidance. And today we have our guest back on the show, Haris Irfan. Haris Irfan is currently the CEO of Cordoba Capital Markets. He has 29 years of investment banking and consulting experience. He was the former co-founder of Deutsche Bank's world-leading Islamic finance team and CEO of Deutsche's Islamic finance subsidiary. He is the former global head of Islamic finance at Barclays, then head of investment banking for the Rasmala group. He's also the author of Heaven's Bankers, Inside the Hidden World of Islamic Finance, the critically acclaimed bestseller about the Islamic finance industry. Haris Irfan, assalamu alaikum wa rahmatullah, and welcome back to The Thinking Muslim.
Alaikum assalam wa rahmatullah. Happy to be back. Great to be back.
Well, it's fantastic to have you with us. Actually, I want to start with your experience from our last show, because that show really did hit off. And I remember on the weekend I was at a conference and a guy approached me and said, "Oh, you're the guy who interviewed Haris Irfan." He didn't know my name. He knew your name. What's been the response since that last conversation?
I've been absolutely blown away. Very surprised at the level of interest in this particular subject, which tells me that it's not a niche subject.
No.
It's one that has direct relevance to all of our lives. So it doesn't matter what profession we are, whether we are doctors, nurses, engineers, teachers.
Yeah.
Economics and finance is a subject that impacts every one of us, not only our daily lives, but the world around us. And it's really, really important that we understand it. I think when I was a student, I didn't understand it. I didn't give it any importance. And it's only in later life that I realized how important it is for us to understand the subject of economics. I think one thing that appealed to people when we spoke last time was this idea that they felt intuitively something was wrong.
Yeah.
They couldn't quite put their finger on what was wrong. They knew there's something wrong with the global economy, and they also, being Muslim, felt that there was something wrong with Islamic finance,
Yes.
or specifically Islamic banking. And that's something that we talked about in detail. And I think that's why they connected with that, because finally they felt that, okay, we're starting to articulate what is wrong with this subject.
Yeah.
And my feelings about this are structured now, and we can take the conversation a little forward.
Yeah, I think that's very true. In fact, on the last program, you talked about the problem with banks and the way banks function. Now, of course, today's conversation is about how do we look after our money in the West? Like, where do we invest our money if we've got a surplus amount, and how do we save our money? I suppose a natural place to save our money would be these banks. But of course, we're worried about touching riba because of the prohibitions that come in the Quran and Hadith about riba, and very, very harsh prohibitions and harsh punishments towards those who maintain riba practices. But also last week, you talked about last session, you talked about the fractional reserve banking. And that, in many ways, makes us question these banks in an even deeper way. So what other alternatives do we have as Muslims to normal banking options?
Yeah. maybe it's helpful to do a quick 30-second recap of what we mean by fractional reserve banking, because it's a term that's often used and very little understood. I felt that there was some misunderstanding and misconceptions in the comments under the YouTube, the last podcast that we did. First of all, very importantly, it isn't necessarily what you read in the textbooks. A lot of economic textbooks are just plain wrong on this subject, fractional reserve banking. So they talk about things like money multiplier effect and so on. This has been widely debunked. Similarly, some people say, well, banks use the deposits that you put in there as a customer to lend out. That isn't true either. Those are just reserves. Fractional reserve banking is the creation of money from nothing. So whenever a bank takes in $1 in deposit, it has the ability to lend out $10 in the form of a new credit financing when it lends money to people. So it's created $9 of new money in the process. Where has this money come from? Literally from nothing. It's alchemy. It's magic. So, if you were a Martian arriving on planet Earth, and you saw how the banks functioned, you would probably conclude that there's a sort of fraud taking place here. And it is. But it's a legal fraud. They're allowed to do this. So that's what fractional reserve banking is. The question is, what are the alternatives? We talked about fintechs last time, financial technology, and we mentioned some of the conventional fintechs like Revolut and Monzo and Starling Bank. You open an app on your phone and you can do your banking and other transactions. And the Islamic finance community is starting to set up new companies, Islamic fintechs, that do specific things. Let me highlight a couple of those.
Please.
One that I like very much and I support very much is FIDA, P-F-I-D-A. FIDA are a home financing company. These fintechs exist to satisfy a specific need. And the need that they satisfy is financing the purchase of your house.
Mortgages.
And they do a debt-free home financing. It's done on the basis of a participation, which I'll talk about in detail later. That's one example of a really good Islamic fintech that's addressing a specific need that Muslims can get their financial services. I have set up a company with my co-founder called Cordoba Capital Markets, CCM. And this is a company that finances working capital and trade finance in international businesses. And it does so also on a participatory model. There are aggregators like Islamic Finance Guru. And an aggregator is a bit like a website that brings together a bunch of products, financial investment products, has them on a menu, you select what you want. And that's a way of accessing a wider range of investment products. So these are examples of relatively early stage companies that are addressing specific needs for Muslims who want non-bank financial intermediaries. And at the moment, we haven't really commercially cracked the idea of a deposit-taking institution that is viable and profitable and accepted by the Muslim community.
Right. You mentioned the word participatory, a participatory model. Do you want to just explain what you mean by that?
A bank has a relationship with a borrower that is asymmetric. The bank is the lender, the borrower is the borrower, and their asymmetric relationship exists because the bank has the power and sets the covenants and decides how the loan will be paid and what collateral and security is in place. When you finance an individual or a business using participatory finance, you're saying, I as the financier will give you some money and I will take a participation in the profits or losses of your business venture. And I'll analyze that venture better than a banker would because I've got skin in the game now. It's not a case of you have to pay me whatever happens, come hell or high water. And if you don't, I'll have the shirt off your back. So participation is about aligning the interests of the two parties as partners in a venture.
And that accords more with an Islamic model of finance.
Correct.
Okay. So in the last show, we had a very long discussion about how the Islamic banking or Islamic finance industry does not necessarily accord with the overriding spirit or aims of Islam. But technically, some of these contracts or some of these ways of either borrowing money or saving money, they may be Islamically acceptable because they do follow some form of letter of the law. For the ordinary person, why should we care about your meta-analysis? Why not just, we've got busy lives, why not just worry about whether the specific negotiation accords with the precepts of Islam?
In a sense, I tend to agree with what you said. We've got to be pragmatic. We've got to live in the real world. And if a scholar has taken the very significant responsibility of deeming a financial transaction to be fully compliant with Sharia, then it's acceptable for us to accept that, if that scholar is appropriately qualified. And I know many of the scholars, and they are excellently qualified. And they're also excellent human beings. So in a sense, you could say, why overcomplicate? Why not just accept that Islamic banks exist and we need to use their services? I did use the term oxymoron last time, meaning that we call this thing Islamic banking. On the one hand, it's fractional reserve banking. In other words, it creates money from nothing. And on the other hand, it's Islamic because we overlay these halal contracts on top of it. And we thereby deem an Islamic bank to be a halal financing institution. You can take that at face value. You can say it is a halal financing institution. But you might want to deep dive as well, because if we deep dive, we uncover a lot of issues that we need to resolve in the global economic ecosystem and within the Islamic economic model. There is an ideal Islamic economic model. It's not one that is being realized by what we're doing in the current Islamic finance industry. So this, if you like, is our form of jihad. It's our form of striving. We're striving to create a better economic system for humanity and Muslims, both. And I think if we just rest on the laurels that the Islamic finance industry rests on and say, great job, pat ourselves on the back, we've done X% more business this year, and we'll carry on doing exactly the same thing, you don't really move the game on, you don't really move towards an idealized version of the Islamic economic model, which I believe is an excellent one.
I mean, how much can we separate this Islamic economic model from Islamic state, Islamic governance? Some would argue that, Islam comes as a package. And if you really want this idealized version, you need to have a caliphate. You need to have some form of governance structure which moves beyond our current nation state models. Can you have an Islamic model of finance or economics without Islamic governance?
Yes, you can. You don't even need to call it Islamic. It's just ethical.
Really?
In fact, we've already demonstrated in the UK that English law is very compatible with Sharia as far as financial transactions are concerned. In fact, much of English law, some of English law derives from Sharia itself. The trust law, for example, in English law is derived from the Waqf and its developments in the Islamic world. If you look at the statutes of endowment of Merton College, Oxford, which is one of the oldest colleges in Oxford University, it's pretty much a word-for-word translation of statutes of awqaf, of foundations of endowments that existed in places like Jerusalem and Cordoba and Baghdad at the time in 1264. Why was that? Because the founder of Merton College, Oxford, was the head of the Knights Templar, and he would have been in Jerusalem at that time, and essentially copied that trust law into English law. So a lot of what is in English law is fully compatible with Islamic finance. A lot of Islamic finance cases are heard in English courts. That's how much we, we consider English law to be compatible. Can we still move to a better model? Yes, there are some challenges. Tax is one of those challenges. In most of the world, debt is favored more, it is preferred over equity because it has tax advantages. If you remove that tax advantage or equalize that tax advantage, then you no longer need to rely on debt. You can have participatory finance, which is not necessarily a form of debt. So we can move towards that model. We don't need to call it Islamic. I don't call my company Islamic. I don't put halal labels on it. I don't use Arabic words. It's just an ethical form of financing that is participatory. My first and my biggest client is, in fact, a business that has no relationship with Islamic finance. The owners are not Muslims. They are interested in doing good ethical business, and they found a financial instrument that helped them to finance their business. So we don't even need to use these terms, these labels. This is just a good way of running a financial and monetary system. And there is the idealized model, and we can move towards it, and it won't be incompatible with what we already have.
Let me ask you about the spiritual element of Islamic finance. How does Islam ask us to handle our money?
For the pleasure of Allah.
Yeah.
It's not sinful to be rich. It's not sinful to generate profit. But how we acquire that wealth and how we spend that wealth will determine what barakah there is in that wealth.
You know, these are very controversial statements, because there are some Muslims who believe that wealth intrinsically is an evil thing. I mean, you're saying it's just not evil.
Some of the Sahaba were rich people.
Yeah.
They contributed to the community. They set up foundations. Yeah. They were people who allowed for the velocity of money through the economy. Right. Money circulated between hands, buying and selling goods and services to create a healthy, prosperous society at all levels. Yeah. Why is profit a bad thing? There's nothing intrinsically. Show me where in classical scriptures it says that being rich in and of itself is a bad thing. It doesn't. How you use that wealth, how you acquire that wealth is the most important thing. Right. And if we're doing it to level up our communities, if we're doing it to spread the money velocity throughout society, then that's a good thing.
I want to ask you about the Islamic concept of rizq, the idea about how sustenance comes from Allah subhanahu wa ta'ala. How does rizq as an idea interact with how we engage in the real economy? Like, how does it impact on how we save and earn and how we spend?
Our rizq is already written. It's already preordained whether we're going to be rich or poor. So again, how we earn our income will determine how much barakah there is in our rizq.
Yes.
And something that I've often found, and just reiterating the spirit of Islam in this, verse 275 of Surah Al-Baqarah, is they consider, riba to be like trade, but Allah has forbidden riba and permitted trade.
Yes.
And we forget this, and we normalize riba. I am reminded of the acquisition of Asda, the supermarket group.
Yes.
And this by a couple of Muslim brothers in Blackburn, I believe.
Yes.
And that business has almost £4 billion of riba-based debt on its balance sheet. Riba is a cancer. It infects everything it touches. And people who forswear riba and remove it from their businesses and from their lives lead happier lives, lives that are more blessed, have more barakah. They sleep better at night.
Yes.
They have better relationships with the people around them. Yeah. I've found this. It's a fact. I see it in people who have stopped indulging in leveraging their businesses with interest-bearing debt.
Yes.
They have purified their rizq. They've made it halal, and there's manifest barakah in what they're doing now and the lives that they're living.
Yes.
So, I also often get asked by young people, should I work in financial services? I'm worried about my rizq. Can you help me navigate through these different parts of banking? What's good, what's not so good?
Yeah.
And what I say to them is keep your eyes on the prize. Because if we don't have people who are capable of understanding the modern sophisticated financial services industry at the coalface, you can't study this in an ivory tower. You can't study this as an academic. You have to be in there to know how it works. Hence why people say, oh, that's not how fractional reserve banking works. This is how it works because my textbook told me in my economics class. Yeah. And I say, well, I've actually been in these institutions for 30 years. This is actually how it works. If we want to progress our Islamic economic model, we need to know how the current model actually works on the ground. Now, one needs to treat it as a means to an end and not the end itself.
Yeah.
So many people I've known in the industry, Muslims, have at one point early on in their career thought, I'm not very comfortable with this. Is there a way that I can do this and still be halal? But they carry on doing what they're doing, and 20, 30, 40 years down their line as they're approaching retirement, they suddenly realize, oh, I've got my nice house and I've got my nice cars, my kids went to private school, and I achieved all of that, but I forgot, I took my eyes off the prize. I forgot why I was doing this in the first place. So what I always say to young people is, if you want your rizq to have barakah, keep your eyes on the prize, make sure that you know the reasons why you are getting these skills and experiences, and then do something better. Take those skills away, do something better afterwards.
Of course, you want these young people to eventually ply their trade, ply their expertise to your model, to a truly Islamic finance model, an Islamic economic model. Are there opportunities at this stage for these young people to work on such models?
I think if young people go straight into a startup, which purports to be Islamic and works on some Islamic finance product, they may struggle to find those skills and experiences they really need.
Right. So they need to be in industry first.
To fight toe-to-toe with the best.
Right.
If you want to fight the best, you have to understand the best. And that means for a while embedding yourself within those blue chip brand name institutions, getting the best experience that you can. This is what I say to young people after the lectures I deliver. Yeah. I say, go away, get your 2 to 5 years at Clifford Chance and Deutsche Bank and all these top institutions. Then come to me with your skills and experience. It doesn't matter if you are a lawyer, a coder, a marketing specialist, a financial engineer.
Yeah.
I will need all these people to build the next phase of the Islamic finance revolution. Yeah. So come to me in 2 to 5 years' time with the top blue chip experience, because I'm going to need those specific skills and experiences in order to create the best of its type in this industry.
But aren't you afraid? I mean, we live in a neoliberal world, but many of these young people just get lost in that system, and they will be the product you suggest you don't want them to turn into. Those people who in 30, 40 years' time look back and realize that it was all about self and not about community and about how do we prevent that? And it's a very, it's very precarious sometimes for younger people in this world.
It comes down to personal motivation, personal determination. Those people who discipline the nafs, who have sabr, who train themselves. Ramadan is a month of training for them, not just not eating. They discipline their ego. Those are the sort of people who will maintain that focus on the end goal.
Yeah.
And the ones who don't discipline themselves, who have high time preference, not low time preference,
right,
who don't save and invest for the future, who don't sacrifice today for better tomorrow. Those are the ones who end up 40 years later saying, I remember I once had this dream and I never really realized it.
Yeah.
So it will come down to the individual.
Yeah, that's a very good point. And these are the people you need, right? These individuals who are committed and think about the broader aspects. In our last discussion, you drew a dichotomy between the real economy and the financialized economy, the non-real economy, if that's even the right term. I don't think I asked you enough about, asked you to explain that in greater detail. What do you mean by the real economy, and how does that differ to the other economy?
It sounds like a little bit of a silly answer, but the real economy is anything that is not the financial economy.
Yeah.
But let me explain that.
Yeah.
The financial economy is all financial services. And it is characterized by this concept of what we call financialization, which is something that took place effectively, started in the 1950s, but really accelerated from the 1980s onwards.
Yeah.
And this is the proliferation of debt and financial services, intangibility in the global economy. So if the financial sector is insurance companies, banks, fund managers, and so on, then the real economy is everything other than the financial sector. So it's everything that's not to do with financialization.
Yeah.
So it's the factory that produces widgets. It's the barber shop on the high street. It's every business in the world that is not engaged in financial services.
Right.
And the real economy is one that produces real goods and services. One thing that I find interesting about financial economy is the degree to which it has become intangible.
Yeah.
So we're shuffling pieces of paper around that have some vague connection to a real economy trade somewhere in the world, an actual activity that's taking place. And these pieces of paper become increasingly divorced from that underlying asset or trade. And hence you see the proliferation of derivative type contracts.
Yes.
The Islamic economy is one that is focused on tangibility.
Right.
Every financial transaction has a one-to-one correlation with an actual trade or goods or services taking place.
Right.
There's always this one-to-one. There should always be a one-to-one relationship between the two. That's not the case at the moment in the Islamic finance industry, but the idealized model says the Islamic economic model is one that is based on prophetic trade. So if you think about what do we mean by prophetic trade, imagine the caravans leaving the city walls, carrying their spices and textiles, trading, bringing them back within the city walls, trading in the marketplace, and then sharing their profits with their investors.
Yes.
That's an example of prophetic economics. And that's the Islamic economic model that we need to try and implement within the Islamic finance industry. So we currently have this sort of almost master-slave relationship. The banks and the financial sector are the master, and we, the people who service our loans, our student loans, for example, every one of us will be burdened with this. It's a tax that we pay down over our lifetimes. We've become economic slaves, and we have an asymmetric relationship with the people who lent us that money, the banks. That is not a relationship that exists in the ideal Islamic economic model. The relationship that exists in that model is real economy and risk sharing, where we participate and align ourselves with each other's success.
So you've said at the end there, the Islamic economic model is one where there is an engagement with the real economy and there's risk sharing. So let's talk about risk sharing. Explain that to me, please.
I think Allah wants us to strive. He wants us to be of benefit to humanity. And that's a form of worship, actually. I think striving in your business to be a benefit to your community, to your family, to your neighbors, to society is itself a form of worship. If you have that intention. That's what I believe. And I think taking risk is part of the natural state. It's like our fitrah. It's our natural human state to want to take risks for the betterment of all. Risk sharing is natural and healthy. I think if investments were socially impactful, if they were commercially viable, we would have a healthier economic system. What we have today is that we throw money at commercially dubious and socially useless ventures. So in the financial services industry, there is a type of institution called a venture capital firm, VC firm. And these are firms that pool investors' funds and invest in early stage companies, startups often. And typically their hit rate will be 1 in 10 investments will come good. So they're throwing a lot of money at bad investments. This is rather odd to me. Why does that happen? Why do we have an economic and monetary system in which VC firms are throwing money at socially useless and commercially dubious ventures?
I mean, surely they don't know at the start whether these are dubious investments.
They don't know at the start, but they seem to be pre-programmed to throw their money away. And the reason why I believe they're pre-programmed to throw their money away is because the money supply is inflated. The money supply is inflated because there's more money in circulation. If you leave money sitting in cash in a bank account, it'll devalue very fast. The government tells us the inflation rate is 3 or 4%. That's not true at all. In fact, if you add up the basket of everything that we actually do pay for, our mortgage payments, our energy costs, our grocery baskets, etc., you'll probably find it's a much higher number than that. And that money sitting in the bank devaluing at 8, 9, 10% per annum, at least in recent years. So the VC firms are almost incentivized to throw money away before it devalues. They have to find something, anything to put their money into. So they throw it into high time preference projects that they think will earn them a quick buck. They don't think for the long term. They don't have low time preference because their money supply is not low time preference. If their money supply was sound, for example, if we had a gold standard, and for thousands of years we had a gold standard. And the funny thing is, there are actually hadith that alert us to this. If you bought a piece of livestock, say a goat or a sheep, 1400 years ago, you would pay roughly the same in gram weight of gold for that livestock as you would today. It's remarkable. If I held $100 in the year 1900, by the year 2000, it's worth only $4. It's devalued by 96%. Since 1971, when Nixon removed the gold peg from the US dollar and allowed the currency to just be printed to finance a war, we've had a reduction to 1/7 of its value in 1971 of the US dollar. So this is a clear theft of wealth from the people And it's the reason why the financial services industry keeps proliferating debt. What's the easiest way for a nation to finance a war? Keep printing money and keep printing bonds.
Yeah.
So you keep having to repay the banks. But it's easy to repay debt when you inflate the money supply, right?
Yeah.
You've devalued money in the economy. The easiest way to repay the debt is not actually to repay the debt, it's just to devalue the money supply. So you print. We call this fancy names like quantitative easing. But actually it's money printing.
Right.
And we've come to accept this. So I think that's what we've got to, is that, you know, risk sharing is so central to investments, and we've moved away from risk sharing to an asymmetric relationship with banks, who are the master and we are the slave.
So you know, if I'm an investor in an Islamic model, it seems to require a greater degree of participation and know-how and knowledge and pursuance. Doesn't that take up a lot of time? I mean, there may be people out there who've got money, surplus money, they want to invest that money, but they don't really want the hassle of participating and finding out about a company and pursuing that company on a yearly basis. I mean, is that what's required from an Islamic perspective?
Yeah, you're quite right. I mean, we don't have the time. No. Most people, lay people who are not involved in the finance sector, don't have the time.
Yeah.
They're busy as doctors and nurses and engineers and lawyers.
Yeah.
We can't expect them to specialize in this area. Yeah. I'm in the very fortunate position that that's the area I work in, so I can self-select and I can see what investments and what companies I want to invest in.
Yeah.
But that's not a luxury that's afforded to the vast majority of people. So we have to find appropriate managers of our money.
Yeah.
And we have to create a self-contained ecosystem of Islamic money managers.
Yeah.
People who manage our money not only in a halal way, but also one with our best interests at heart. Again, so our community levels up.
Right.
So that we are all economically successful.
Yeah.
And that needs to be a risk-sharing, real economy, financial services industry.
Yeah.
It avoids the trap of fractional reserve banking. That's something that we've got wrong as an industry in the last 40 years or so.
Yeah.
Is that we have consistently gone down this line of replicating, of reverse engineering conventional debt products within Islamic banks.
Yeah.
So we look at what the conventional banks are doing and say, how do we replicate that using halal contracts? Now a little bit of smoke and mirrors, and we have this Sharia compliant structured investment product.
Yes.
Right? Which, you know, really, whilst it may follow the letter of the law, it doesn't necessarily follow the spirit of the law.
Yes.
That's what we need. That's why we need to, as a community, educate ourselves, understand finance, understand what is the thing I'm looking at. Is it a form of banking product dressed up as something else? Or is it genuinely, like FIDA, the home financing company, is it genuinely a debt-free financing instrument that's good for us all?
So you're really saying that we need to find good money managers. We need to find people who are intermediaries who accept that our money should really circulate in the real economy and who believe in this participatory model, this risk-sharing model.
Yeah.
Of investments. I had so I sent a message out to my patrons and a few got back to me. There was somebody who got back to me and asked, look, if I had $10,000 or pounds today, what would Haris recommend I do with that £10,000?
It would depend what stage they are at in life. So everybody has a different risk profile and risk appetite.
Yeah.
And the very first thing I would say to anyone is avoid at all costs the Instagram influencers. For some odd reason, they like to post from gyms flexing their biceps.
You're not an Instagram.
I'm not an Instagram. You know, this is very odd to me, and they promise 10x returns, 10 times, 10 multiples of what you put in there.
Yeah.
Run a mile. This is nonsense.
Yeah.
You can't do that. If someone told you at the beginning of your life, I can manage your wealth and your finances and give you a surefire 10 to 12% per annum yield of income on your capital, I would say that would be an amazing result, a stupendously good result. If you're earning 10 to 12% per annum on your capital, that is excellent.
Right.
Obviously adjusting for inflation.
Yeah.
But instead, what we see, especially in the Muslim community, which I find very odd, is these influencers who are saying, I'm going to double, triple, 10x your money. And obviously, again, very dubious. So the first thing I say is, deep dive on the people that you are investing with. I tend to prefer grey hairs and a bit of wisdom to balance the energy and dynamism of Gen Z, who also are valuable in this case because they are coming forward with the new ideas and developing the companies and are tech savvy. They know how to code, they know how to develop apps. But you do need those wise old heads, you know, to develop the financial product itself and not fall into the pitfalls that we've had previously, like fractional reserve banking. So that's, you know, that's sort of, in a nutshell, I would look for the people, the track record. If someone came to me and said, I need to invest my money for the long term, I have a relatively low to medium risk appetite, I want to put some money into various things, then I've written a number of articles on this subject. I will talk a little bit more about the types of instruments and constructing a portfolio. But, you know, there are a lot of things that one can do, a lot of instruments out there. We'll talk about that a little bit more as we go along.
I mean, what are the common pitfalls then that we should look out for when we think about investing ethically, apart from what you've mentioned about Gen Zs versus grey hairs?
I also look for leverage or debt that is disguised.
Right.
Last time we talked about this Sharia contract called the commodity murabaha or tawarruq. And I did say it's not necessarily hugely important exactly what that contract is, but often when you see it in the small print, and everybody should read the small print, often it is a proxy for a loan financing. And it has become a default for people who aren't particularly concerned with doing things right. They say, oh, I specialize in Islamic finance, and we did a commodity murabaha financing of some business or some property. Now, there are cases where it has to be used because there is no alternative. For example, due to tax legislation, there are some Islamic fintechs out there that I do support who have, for example, fractional ownership models of real estate. And they've had to use the commodity murabaha because there was no alternative available to them. And they've been lobbying HMRC to change the legislation. That's something that I will champion because I feel that they have the right attitude. They intend to make progress. They intend to change the industry for the better. But those lazy, you know, individuals who pretend to know something about Islamic finance and say, I got some top city lawyers and they drafted me a commodity murabaha contract, and now I have an investment product that is halal, and here you are, I've got a stamp on it. Avoid that. Look for leverage. Look for debt-like instruments. Look for participation, look for risk sharing, look for equity sharing, profit sharing. How do they share the profits? Do they align themselves with you, the investor? Do they have skin in the game? Or is this an asymmetric relationship? That's what the small print will tell you. And it's a process of education. I would recommend you get online to see Islamic Finance Guru. They have very good educational material on their website. You know, it explains very well, you know, how Islamic financial contracts work, how different instruments work. You know, I don't necessarily agree with everything they say, but I think there's a huge amount of excellent advice on there.
I mean, it is often the case that businesses require loans to trade, to buy product, to buy materials, to build their industries. And the obvious place, of course, is to go to Western financial institutes, and maybe Islamic finance is now dealing with some of these SMEs and helping them. But, you know, you have a different model, or at least you have a more refined way by which Muslims should discern who they invest with and who they borrow money from. Are there enough providers out there at this stage to help small, medium-sized industries in financing what they want to do?
I was listening to a speech by Sheikh Hamza Yusuf, and it's a very short clip. It's 10 minutes on YouTube. And he talks about trade, the prophetic idea of trade. What is ethical transactions between people? He bemoans banks for the obvious reason. He bemoans Islamic banking as a sort of smoke and mirrors, a kind of obfuscation of the true economic model that Islam should follow. And he ends by saying, where are the Muslims? Where are the Muslims? I'm here. I'm right here. I'm trying to do exactly this thing. I'm trying to create an Islamic finance industry
Yeah.
that truly goes back to its roots of prophetic trade.
Yes.
So when I and my co-founder set up CCM, we wanted to, I'm going to use a technical term, securitize or monetize a trade into a modern, sophisticated financial instrument that would be listed on the stock exchange somewhere.
Yeah.
So I wanted to go back to the idea of prophetic trade. Muhammad Sallallahu Alaihi Wasallam was a mudarib. He was a manager of people's money. His first wife, Khadija, radiyallahu anha, she was a Rab al-Mal, an owner of the capital, lord of the wealth. So she invests her money with him. The caravans leave the city walls, they trade, they come back, bring spices and textiles or whatever. They trade in the marketplace. The mudarib, manager of the money, and the investor, the Rab al-Mal, share according to a predetermined ratio in the profits or losses of that venture.
And that ratio is up to the partners, not
It's up to the partners.
There's no Islamic prescription
Correct.
to say, okay.
Exactly.
Yeah.
Now, they have created an arrangement between themselves called a Mudaraba, an investment management agreement. And they both have skin in the game. They're both aligned. So the manager and the investor must do due diligence on this venture that they are undertaking. And the manager is key to this. His or her skill is key to unlocking the value in these goods and services.
Yeah.
Now, this is a model that is pure Islamic economics. And I wanted to bring this model to my company and to create a financial instrument that exactly replicates that arrangement. The weird thing is, we talk about Mudaraba and Musharaka and similar risk-sharing contracts in the Islamic finance industry, but you won't find them anywhere. I tried to look up a Mudaraba contract used by Islamic banks.
Yeah.
I couldn't find one. I ended up writing my own from scratch. That's how far the Islamic finance industry is removed from prophetic trade. And I wanted to bring it back. So the financial instrument that we created is, in some senses, it's a little bit like a bond, because it's an instrument that you can buy and sell on a stock exchange, and it will entitle you to some income stream periodically, let's say every quarter.
Yeah.
And what differs is that your money is not guaranteed. Therefore, the level of due diligence by the manager must be much, much higher than a bank would typically do. We sit for months embedded within that company that we're financing to make sure that its internal governance, that its controls, that its operational processes, the entire flow of cash from injection from the investor to profits back to the investor, we need to follow that in forensic detail all the way through and know exactly what the risk mitigants are throughout. So we're not saying to the investor, we guarantee your money back plus interest, which of course is a loan with interest. We're saying we've done a level of due diligence that other people don't do. That's why we're very assured that this is a solid business venture. Sure, it's possible to lose your money, but we have risk mitigants in place.
Is that what sets you apart from a typical VC model where?
Yes, exactly. We're not throwing money after dubious ventures. We're analyzing in the nth degree of detail. And actually also, we are funding a specific trade activity. So my ambition one day is to have thousands or maybe tens of thousands of these instruments listed on a stock exchange, each one dealing with a specific business activity. So you're not buying the shares of the company. The investor's not saying, I'm taking equity in the total enterprise. And whatever activities that company undertakes, I'm at risk against those activities. No, we're saying here's a specific trade that this company does. It might be the buying and selling of steel or some agribusiness somewhere in the world from one place to another place. And we follow that particular action from start to finish. We're saying we have monetized or securitized this specific trade. And that's the essence of trade in Islam. And that's how we want to share our profits and align ourselves with our investors.
I mean, yesterday there was a scare in the global stock markets. There was a fear that the American economy is going to go into slump, into a recession. And that implies that the real economy sometimes will often have these downturns. And that can lead to terrible results for investors. There's nothing what you've said suggests that those vulnerabilities would not we would be immune to those vulnerabilities if we invested in the real economy And that is what a classic, I suppose, risk-sharing agreement is about, right?
Yes.
Yeah.
What if you had a real economy that was not predicated on fiat money? We may ask ourselves questions like, why did the cost of living crisis happen?
Yeah.
And then we point to, inflation happened because of, Brexit or the Ukraine war or energy costs started going up. Now, these are not the reasons.
Right.
The reason why we had inflation and therefore the cost of living crisis was because we inflated the money supply in a crazy manner over 10 years, more than 10 years.
Yeah. And why did we do that?
We did that in order to stave off a crisis in 2007, 2008 to save the banks
Yeah.
from their own stupidity,
Yes.
right? So we privatized their profits for a select few and we socialized their losses for everybody. And now we're all poorer. And now our money supply has been inflated. We've experienced inflation as a result, and we have a cost of living crisis. We have problems in the real economy. So if you had a real economy that had a sound form of money, not an unsound form of money, an unsound form of money is one that can be manipulated, one that can be printed at will. Again, we give them fancy names like quantitative easing. And what if we had a gold standard? What if we had a form of money that could be used as a medium of exchange, as a store of value, could be transported, could be what I call saleable across time and space? I mentioned this idea that a goat or a sheep would be worth the same 1,400 years ago in grams of gold as it is today.
Yeah.
That's a money that doesn't devalue over time. But gold is impractical because, first of all, it's heavily manipulated by a few parties in the world.
Yeah.
It's held, a large part of it is held in one part of the world, which is the US, and therefore subject to whatever sanctions that they may determine.
Right.
And we saw this with the US dollar, by the way, when they withheld $7 billion of Afghan money over a devastating winter in which many Afghanis died because they didn't have access to their own money sitting in US banks. Yeah. What if you had a type of money that was not manipulated? Gold is manipulated. It's impractical. I can't carry gold coins around with me, jangling in my pocket. If I want to buy a Mars bar, I can't cut a gold coin up into pieces. Similarly, I can't, it's easy to counterfeit, relatively easy to counterfeit. It's hard to verify gold. So there's lots of impractical things associated with gold. Yeah. I agree that we had a golden age of the Islamic Empire with a bimetallic currency. And that was a time of great prosperity for us. And in fact, every civilization that's had a gold standard has experienced these moments of great scientific and cultural advancement. Look at the architecture from those periods. It stands to this day.
Yeah.
Right? So, and I know that last time I very briefly touched on this word, Bitcoin. And at this point, I'm going to lose half of your listeners.
Yes.
I found one comment very funny, by the way, on the last podcast.
Yeah.
An individual wrote, I was following this guy and I was agreeing with everything he was saying
until he mentioned Bitcoin.
Until 58 minutes he mentioned Bitcoin. And I immediately disregarded everything he had to say. Well, stay and listen.
Yeah.
Because there's something here that needs to be analyzed. And many scholars are coming around to it. So initially, maybe 7, 8 years ago, you had a number of very senior scholars, some of them sort of social media scholars saying, Wallahi, this is haram. Because of money laundering, because of volatility, because of criminality, because it's not backed by the government, because it's not real, because it's not tangible, because of energy, because of this, because of that. All of this is FUD, fear, uncertainty, and doubt. It's a form of propaganda.
Yes.
And if the IMF and the World Bank and central banks are telling you that this is a bad thing, it's probably a good thing, right? Because they exist to enrich a very small group of people. In fact, the IMF exists, if you look at it empirically, to reallocate resources and wealth from the global south to the global north. Sure. Pakistan has gone to the IMF, 20 times? Gets poorer every single time. Apparently, the job of the IMF is to help the third world, is to help developing economies develop. It doesn't actually do that. It does the exact opposite. It makes those countries poorer and they become economic slaves. Yeah. And half of their GDP is focused on servicing debt to the West. So again, what if you didn't have to use banking rails and fiat money that can be printed at will? What if there's a form of money whose algorithm is set in stone and cannot be manipulated because the network effect is so great that it's too expensive and costly and energy difficult to attack that network? That's what Bitcoin is. So I will lose some people at this point, but I want them to research this. Many scholars have researched this and come round to the idea that it is actually, there's something in this that could be good for humanity. And we need to look at it more clearly. Some have outright said it's halal, and I believe it to be a Sharia-compliant form of money. I personally believe it's the most Islamic form of money ever created because it's freedom money, it's anti-riba money, it's anti-inflation money.
Yeah.
You can't create it from nothing. That has a very powerful impact on the world. And if you had a sound money base, maybe it's not Bitcoin. Maybe it actually is the gold standard. I don't know.
Yeah.
But if you had a sound money base on which to build real economy financing, that is the ultimate Islamic economic model.
So what makes a money Islamic?
It needs to have the characteristics of wealth, mal, or the characteristics of legal identity, the characteristic of currency. So it acts as an exchange between people. So it has those three things, it is money. And I believe Bitcoin has those three things. And many scholars will agree with me. Gold has those things. US dollar has those things. But fiat money, dollar, pound, euro, yen, etc., have significant problems because they're manipulated.
Right.
I wanted to donate money to Gaza, and I couldn't get in through the banking rails. I couldn't donate them dollars or pounds or whatever. Banks refused to allow money to leave. I donated through Bitcoin.
Right.
Bitcoin is saving lives in Gaza. In Lebanon, people are holding up banks, demanding their money back. There's a famous case of somebody who held up a bank and said, I want my money back, not your money.
Yeah.
The money that I have put in your bank that you're withholding from me. In Lebanon, of course, was experiencing hyperinflation.
Yeah.
And the banks had capital controls. They needed to save the life of a relative who needed life-saving surgery, but the bank wouldn't let them withdraw their money, so they resorted to extreme circumstances. Now, this is not freedom money. This is not money that belongs to you and me when we deposit it in a bank. Suddenly we're asked a lot more questions. I know that if I were to send money to places like, I don't know, Pakistan, Afghanistan, possibly even countries like Kenya, I will be asked a lot more questions. I have experienced freezes on my bank account because they needed to know more about what am I doing with this money. It's my money. What is it to you?
Yeah.
But that's the way money works today. And that's why I seriously believe in a form of money that is free from manipulation from third parties.
Earlier on, you talked about how if a scheme suggests, an Islamic scheme suggests you get rich quick, it's probably going to be a dud scheme. It's a problematic scheme. Are you, in effect, implying that if one restricts oneself to an Islamic economic model, the level of maturity, the level of income is going to be far less than what one would typically get from the financialized economy?
Maybe in the current world, maybe there's some truth in that.
Yeah.
But why do we need growth? And I want us to think about this really carefully. What is growth for?
Yeah.
Much of growth is to service debt.
Right.
Debt exists because we have financialization of the economy. Financialization exists because we've made money cheap and plentiful. We've made money cheap and plentiful by inflating the money supply because we can inflate the money supply. It's a powerful drug for governments to keep financing a perpetual state of infinite war and environmental pollution by simply printing more money. We're destroying ourselves and we're destroying the planet by continuing to insist on growth, growth, growth. We don't actually need to do it that way. And if we had a form of money that didn't devalue over time, that wasn't inflationary, that didn't cause this increase of money supply, then we would be in a position where we don't have to get rich quick.
Yeah.
We now have low time preference. We save and invest for the future. Again, we have sabr. We train ourselves in Ramadan. We discipline our nafs. We, as Muslims, are intrinsically, or should be intrinsically, low time preference people. We shouldn't be the kind of people who need to get rich quick and service our debt. We shouldn't have debt. It's inevitable. I mean, people will need to study at university. They take on student loans. It's a necessity, right? People want a roof over their heads. They want a car. People take on debt. I'm not saying, it's a sin just to take on debt. What I'm saying is that these are necessities, but we can service these necessities in a better way. And I sincerely believe that there is a better model out there, and we don't have to have infinite growth on a finite planet.
Yeah. What other ways are there available to us to save our money? If we want to avoid banks and the riba, and we're dubious about some of the Islamic banks, how else can we just save our money in a way in which we don't have to necessarily participate on a great deal, because most of us just don't have that time. And we're worried about, your investment models bring with it a level of risk. I'm sure risk is everywhere.
Yep.
But how does one just save money?
Yeah. So there's a process of education that has to take place here. And I recommend that people start out by reading what I say is general business books, general finance books, not complicated textbooks.
Yeah.
There are some good authors out there who write very easy to understand books. There is a Greek economist called Yanis Varoufakis who wrote a book called something like Teaching My Daughter About Economics, or How to Teach My Daughter Economics. Yeah. And it basically does what it says on the tin. And in fact, I used that book to teach my daughter economics. There is a famous anthropologist or economist called David Graeber, who passed away about 3 years ago, who wrote a book called Debt, the First 5,000 Years. Brilliant introduction to what is debt. I really recommend it. Michael Lewis is a very good general author on the subject of business and finance. He's written some excellent books. You'll be familiar, I'm sure, with The Big Short, which is about a group of people who predicted the global financial crisis before it happened.
Yes.
And how did they reach that conclusion? These are the sort of books I recommend to people to read before they start doing a deep dive into Islamic finance and Islamic economics.
Yeah.
And here I would recommend, as I said before, the website for Islamic Finance Guru. They also wrote a very good book about halal investing. I've written a few blog articles on this subject. Of course, there's a book that I've written on the subject as well, Heaven's Bankers. My blog article talks about investing in a halal way, investing and saving in a halal way.
Right.
So specifically, I get down into the detail of how do you construct a portfolio. Muslims really only have, I guess, 3 asset classes that they generally put their money into today.
Yeah.
The obvious one is real estate.
Yeah.
And I think it's a very important asset class. You can see, touch, and feel it. It's even a store of value.
It is. Yeah.
It is cyclical. It does have downturns, but you can earn income from it. It's very flexible in that sense. So it's a good asset class to hold.
Yeah.
But I think as a community, we're oversaturated. We hold it too much.
Yeah.
I personally only allocate 15% of my personal wealth to it, right? What else do Muslims do? Well, some of them believe there's no alternative to conventional finance, so they use conventional products and they buy a conventional pension. Pensions are a very important area, and we don't have a Sharia-compliant pension.
Really?
So, there's this concept in the UK of a SIP, an SIPP. It's a self-invested personal pension, I think, if I've got the abbreviation correct.
Yeah.
I'm sure there's an equivalent in the US as well. I don't know whether you can do that under a 401k. But here in the UK, you can self-select your pension and select the products that you put into that pension. So, for example, at my stage in life, I'm into middle age. My kids are almost grown up now. 2 of them are. I don't want to be investing in risky venture capital schemes, early stage venture, and giving my money to some guy flexing his biceps on Instagram with a wad of cash in his hand saying 10x your money. That's not my guy.
Yeah.
My guy's got gray hairs. And I'm looking for long-term, predictable income. I can't invest in bonds. Here's the problem with conventional pensions. Your conventional pension has a heavy investment in interest-bearing bonds.
Right.
Because that's a way to get good, predictable income stream, an annuity, they call it. And, of course, that's haram. That's riba. That's interest. You can't go to Scottish Widows or Prudential and say, hey, can you give me the Islamic version of this? They won't know what you're talking about.
Yeah.
It's possible they may have a sukuk fund. Sukuk is a type of Islamic bond. But I think I mentioned this last time. I said sukuk could become distorted from what we originally intended when we set up that part of the industry 20 years ago. Yeah. And they now look and feel and walk and quack like a bond. So what is the alternative? Yeah. I mean, my PPNs are an alternative, but I'm a very small company and it's a very big world out there and I can't service retail investors, unfortunately. I'm only available to professional investors. I need to find a way of getting onto retail platforms and making it happen for retail Muslims who are not able to invest, $100,000 upwards.
Yes.
If you self-select your pension plan, there are long-term investments, equities, shares of companies that you can buy. The challenge is you need to be an expert to know which are good companies and which are bad companies. And you would have to, my brother, for example, is a fund manager. He spends all of his days researching companies, traveling to meet companies, visiting their factories, talking to the staff, understanding how this business works, and then saying, I think this is a good or bad company, we should or shouldn't invest in it. We don't have time for that. The rest of us don't have time for that.
Yes.
How do you self-select a broad theme? What if you say to yourself, I think tech is an area with long-term growth prospects? I do. I think it does. Semiconductors, tech, and so on. You can buy a type of financial instrument called an ETF, an exchange-traded fund, which is basically a portfolio of stocks in one financial instrument. So you go to London Stock Exchange and you buy that particular ETF. It's like buying a share.
Right.
And now you have exposure to potentially, 20 or 30 different stocks. Let's say that ETF's theme is big tech. So now you've bought, Apple, Google, Microsoft, etc. Your theme could be renewable energy. So you've now bought renewable energy assets. So you choose a sector that you think has long-term prospects, and then you spread your risk across different industries, different sectors, and be defensive, right? What will perform in a downturn? People still need toothpaste in a downturn, right? So consumer goods, not a bad thing to have.
Right.
Financial sector, leaving aside the fact that it's, of course, most of it is haram.
Yes.
Financial sector is, of course, very cyclical and performs badly in a downturn. So this is not a particularly defensive stock. So those ETFs are something that you can invest in for the long term. If you have a 20-year time horizon, it's an excellent way to give yourself long-term appreciation. If you want income, as I say, real estate can give you income. You can invest directly. You can invest through an ETF or another type of instrument on a stock exchange like a REIT, R-E-I-T. Other types of asset classes, I tell most ordinary investors to stay away from derivatives.
Yes.
There's, again, I'm going back to these Instagram lifestylists. They talk about, at one time there was this fad for something called binary options. I don't even know what a binary option is. And I've worked in the industry for 30 years.
Yes.
And here you are selling retail investors this exotic, hybrid, fantastical financial instrument that can 10x your money. If you don't understand it, if I don't understand it, you shouldn't be investing in it. So I would generally recommend that retail investors stay away from anything that can leverage their returns, that can gear up their returns. That's what options does. That's what debt does. When you buy a buy-to-let property so that you can rent it out and earn income from that, if you use a loan to buy that property, on which you have to pay interest, you've geared up your investment. Now the 10% of the property value that you put in is giving you a proportionally much bigger return because you're not buying 100% of the property. It's the bank who gave you the money for 90% of it. Yeah. Of course, that means in a downturn, you lose your money. Sure. And even though we say safe as houses, it's not really safe as houses if you leverage. If you leverage, you're in trouble in a downturn because the bank will repossess your house. So I always warn investors of this.
Yeah.
So there are various instruments, and I would recommend people look at my blog article on LinkedIn. I've gone into a deep dive on some of the instruments, equities, bonds, sukuk, PPNs, real estate, gold and silver, by the way. I haven't mentioned Bitcoin deliberately because we've talked about it already. But I look for anti-inflation hedges. What if there is financial Armageddon? Should some of my money be invested in, for example, physical gold or physical gold-backed instruments?
Yes.
I think that's a good thing to do because it's a form of insurance against financial Armageddon. Of course, for me, the replacement for gold is Bitcoin. I believe that's its purpose right now. Yeah. It is insuring me against financial Armageddon. And I sincerely believe that. Yeah. So that, I think, is a summary of the types of instruments that people can put into their SIP, S-I-P-P, the self-invested pension plan.
This all sounds really complicated to me. I mean, it's fantastic and it's wonderful. We need people like you to manage our money. I suppose the slightly cynic in me would say, well, are we just not complicated life in the West? And should we just cut our losses? Okay, it's some of this stuff is dubious, it's haram. There's Islamic banking, which is based on this under the hood fractional reserve stuff. But should we be that discerning with our money, and what's the risk of just allowing the dominant economy to govern the way in which we make choices in the financial realm?
Yeah, it is complicated, unfortunately,
Yeah.
and that's the challenge, and that's why we have to educate ourselves. If we educate ourselves, we will level up our communities. The power of the Muslim dollar or the Muslim pound is really strong.
Yeah.
We don't even realize it. You recently had a guest, Ibrahim Khan, on the show to talk about BDS.
Yeah.
And there was an article in the FT just 2 days ago, and I'm going to quote some numbers for you from that article.
Please.
In the Middle East, there's a chain, a fast food franchise called Americana Restaurants, and they own a lot of the fast food chains. In the second quarter, even though they opened 81 new restaurants, they experienced a 40% profit drop as a result of BDS.
Right.
In Pakistan, the biggest Coca-Cola bottler experienced a 25% drop in Q1, sorry. And in Malaysia, Starbucks is down 48% in Q1. That's massive power that we have as a bloc, right? That's why I think we need to act as a bloc economically. Yeah. And when we mobilize, we are very strong, we're very powerful. If we don't have economic independence, then we don't have political and social influence. So one of the things I'm doing, for example, right now is I'm about to go on a roadshow where I will be speaking to professional investors up and down the country. And the theme is sort of self-actualization. I'm sorry to use a corny phrase. Yeah. I want us as a bloc to become powerful and strong. If we unite economically, we can achieve so much outside of just money.
Yes.
We are subject to marginalization and demonization of our community. And that's never been more apparent than today when, whistleblowers in government and elsewhere are encouraging neo-Nazi mobs to smash up hotels holding asylum seekers and migrants, women and children in there being firebombed by these thugs with swastikas tattooed to their arms. And we're supposed to, both sides this. In fact, I'm going to read you what a BBC breakfast presenter said yesterday.
Yeah.
He said, in Bolton, anti-immigration protesters, notice how he calls them anti-immigration protesters, not neo-Nazi thugs. Anti-immigration protesters were confronted by a group of 300 masked people shouting, Allahu Akbar. And I'm saying it as he says it, which manifestly demonstrates the ignorance of the individual who's saying these things and the agenda that they have.
Yeah.
So I find it very interesting that Elon Musk is currently retweeting and amplifying white supremacists and neo-Nazi voices.
Yeah.
A man like Tommy Robinson had, I think, less than 400,000 followers on Twitter before he was banned in 2018. Since Musk reinstated him after his acquisition of Twitter, I think Tommy Robinson is now approaching 1 million-ish on Twitter. Right? These voices are being amplified, and it's creating a very dangerous, polarized world.
Yeah.
If we want to prevent that happening, I recommend that we get rich. We buy the media, we buy the politicians, and we own the narrative. If we maximize our short time here on earth, this is not the real life. The next life is the real life.
Actually, while you were talking there, I spoke to a guest of mine a few months ago who was formerly head of one of the big charities, and he said the problem we face at the moment in Britain and in the West generally is our surplus wealth is all going to charity work, which is ineffective sometimes because we're constantly dealing with the same problems and chasing the same problems. If we think more deeply about our money, we should be allocating at least some of that to these social funds, these political funds that you talk about. And it seems to me that you're very much in favor of that in order to strengthen our community.
Yeah, we are, as I say, we are weak, we're marginalized.
Yeah.
We need to mobilize as a bloc. I want to do what I can for my part on an economic, from an economic perspective, get professional investors together and help us to create an ecosystem that is truly powerful and influential. And then our young people as well need to focus on careers in these areas. There are some organizations out there like the Aziz Foundation, for example, who finance young people to do journalism degrees.
Yeah.
That's fantastic. I'm really happy to see that kind of initiative taking place. We need more of that. We need our money to circulate within the economy. We need to create an ecosystem in which we support each other, because other communities have done it. We haven't done it so well.
Yeah.
And if we support each other, we'll end up becoming more powerful. We'll become greater than the sum of our parts.
Irfan, this has really been a powerful conversation. Jazakallah khair. Thank you very much for your time today.
Jazakallah khair. Pleasure to be here again.
Please remember to subscribe to our social media and YouTube channels and head over to our website thinkingmuslim.com to sign up to my weekly newsletter. Jazakallah khair.